supervisor had defined operational risk as risk of loss resulting from inadequate failure, internal process, people, system, or from external events. Operational risks are quite different than other risks that encountered by banks. The issue of operational risk was still under explored area in the field of finance. So the aim of our study is to find some issue that relate to operational risk in commercial bank.
Effectiveness of Basel III. Basel III was developed as a response to the worldwide monetary crisis and also for the banking regulation to exit their range of areas. So the framework was developed to improve quality of bank capital. So the capital level are enhanced to and meet still larger protection in time of stress, increased risk capture of for market risk, counterparty credit risk, and also securitization. So fundamental for all banks to follow this framework because they can maintain their comfortable equity capital and avoid financial condition issues. So the risky are bank asset, the additional capital it wants. So basic construct of the primary approach to activity operational risk assume that the management of operational risk is vital in business line with high volume, high turnover, which is transaction per unit of time, high degree of structure, amendment and or complicated support system like commercialism activity. So the implemented Basel III has main problem which is impact on profitability while meeting the minimum capital requirement. This may lead to the negative impact on ROE. Therefore, a comparison between the capital ratio of Basel III and the ROE will give an answer on how well banks have developed or have applied the good of Basel III compared to the damage it has done to the profitability. So,
So in this part, we will discuss about mismanagement. What is mismanagement? Mismanagement can be defined as process of doing something badly or wrongly. So basically, mismanagement is the risk that related with poor management, negative culture, and also internal problems. So some banks was characterized by the incompetent administration and instability of the management. So next we go to the negative culture. What is negative culture? Negative culture is the argument between the two parties that can cause the conflict interest between the two parties. So next we go to the poor management. What is the poor management? Poor management is the dysfunctional behavior of the parties such as bank executive. This poor management can cause a problem such as creation of the bad loans. So basically, for the management, the party should prevent this operational risk to help the growth of the bank. That's all from me. Thank you.
My part is ethical issue. So ethics is a set of principles that contains behavioral code to determine what is right and what is wrong. And business ethics are a process of evaluating the decision either before or after with respect to the moral standard of society. So it means that business ethics is choosing the right over the wrong, the good over the bad, the fair over the unfair, and the truth over the lie. So, in the non-financial industry, ethical value is not as important as in the financial industry because it plays a crucial part in the infrastructure of the economy. And the issue of trustworthiness provides large implication to a country. Employee fraud can reduce the outside investor and the stability of the capital market. Hence, with ethical value present within themselves, within the employee, any fraudulent activity may be restricted because they strongly believe what is right and what is wrong.
To the conclusion, after we all discussed about the issue related to operational risk in banking sector, we can conclude that Basel framework mismanagement and ethical issue that happen in commercial bank may give a big impact to their business. Without a proper action, Operational risk cannot be minimized or managed. Among various risks that happen in the commercial bank, operational risk considered as important because it could lead to the destruction of business. It also lead to the loss of reputation and loss of operational capability.